Ever since financial markets began, investors have been looking for the same thing, a magic formula. An algorithm, a hot tip, a shortcut to instant wealth. But what if I told you that the mind behind one of the greatest returns in capitalist history didn't use complex Wall Street formulas? Charlie Munger, Warren Buffett's legendary partner, didn't operate on instinct or esoteric academic theories. He operated using a principles checklist, a precise tool designed to stop the human brain from sabotaging itself. Today, we're going to break down each of the 9 pillars of Charlie Munger's official investment checklist. If you apply this to your portfolio, the way you look at businesses will never be the same. Grab a pen and paper, because this is a billionaire's checklist. Pillar 1. Risk, the beginning of everything. For Munger, every successful investment doesn't start by guessing how much you can make, but by measuring the risk, especially the risk to your good name and the permanent loss of your money. Munger teaches us to build in a good safety cushion, never buy a stock at its highest fair price, give yourself room for mistakes, avoid dealing with shady people. As he used to say, you can't make a good deal with a bad person. Demand enough reward. The possible gains should be worth the ups and downs and unknowns. Watch out for inflation and interest rates. These big economic forces can eat away at your buying power if you ignore them. And most importantly, stay away from losing your money permanently. If you lose 50% of your money, you need to make 100% just to get back to even. Avoiding big mistakes is more profitable than hitting home runs. Pillar 2. Independence. Thinking against the crowd. Munger said that only in fairy tales are emperors told they are naked. In the market, most people pretend to be sure about things that aren't certain. To be a top-notch investor, you need to think for yourself. It doesn't matter if thousands of people or analysts agree or disagree with you. What matters is how accurate your facts are and how correct your analysis is. If you just follow the crowd, you'll likely end up with average results, meaning just okay performance, eaten away by fees and taxes. Real wealth comes from being a smart outsider. Pillar 3. Preparation, becoming a learning machine. One of Munger's most famous sayings is, "The only way to win is to work, 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 and hope to have a few brilliant insights." Wanting to win means nothing without wanting to prepare. In this part of the checklist, Munger asks you to become a lifelong self-learner. Read a lot and try to get a little smarter every day. Master the mental models from big subjects: math, psychology, biology, microeconomics. Always ask why, to find out what really makes the numbers tick. Be humble about what you know. Recognize the limits of your circle of competence. If you don't understand how a tech company makes money, just move on to the next one. Knowing what you don't know is the start of wisdom. Actively look for things that go against your investment idea. Don't fall for the trap of wanting fake accuracy or fake certainty. And most of all, never fool yourself. Remember, you are the easiest person to fool. Pillar 4. Analytical rigor, the scientific method. In the market, too much information just creates noise. Munger fought this with careful analysis and the scientific method. Price versus value. Price is what you pay, value is what you get. Look for real business progress, not just crazy market activity. Figure out the value beyond the price, the progress beyond the activity, the wealth beyond the size. The obvious over the esoteric. It's much better to master simple, obvious ideas than to try and figure out big economic predictions or fancy algorithms that nobody really understands. Think like a business analyst. Forget the stock chart for a moment. Focus on understanding the product, what makes it hard for others to compete, and who the customers are. Be a business analyst, not a market analyst, or a macroeconomics or security analyst. Within your area of expertise, try to find companies with strong competitive advantages that will be winners over the next 10 years. Second-order effects. When something happens, don't just look at the immediate impact. Ask yourself, what happens after that? And use Munger's secret tool, inversion. Instead of thinking about how to make a company succeed, think, what would completely destroy this business? Actively avoid those traps. Pillar 5 and 6, capital allocation and patience, the secret of time. After analyzing and filtering, we get to the part where you actually do it. And here, the golden rule is smart allocation. Putting your money in the right places is the most important job of an investor. Munger reminds us that the cost of an opportunity is always measured by your second best choice. Brilliant ideas are super rare, so when the odds are really in your favor, you should put a lot of money into it. Don't spread your best shots thin across dozens of average ideas. Don't get too attached to one investment. Be careful with the situation and look out for chances. But what about when that big opportunity doesn't show up? That's where the hardest pillar for modern investors comes in. Patience. Fight the natural human urge to act on impulse. Compound interest is the eighth wonder of the world, Einstein. Never interrupt it unnecessarily. Avoid the bad habit of constantly buying and selling stocks. Just acting for the sake of acting only makes your broker rich with trading fees and the government rich with taxes. Enjoy the process. Getting rich with value investing is slow, quiet, and boring. If you want excitement, go to a casino. In the market, look for the peace of the long term. Enjoy the process and the profits because it's in the process that you live. Pillar 7 and 8, decision and change, readiness and adaptability. Patience is super important, but when opportunity knocks, act with conviction and confidence. Be fearful when others are greedy, and greedy when others are fearful. This classic saying from Buffett and Munger takes guts. Historic buying opportunities pop up precisely when the market is in its biggest panic and chaos. It's when opportunity meets a prepared mind. What if things change? Munger was strict about the pillar of change. Live with change and accept that things will always be complicated. The world isn't going to change to fit your ideas. You need to accept how complex and real things are, especially when reality goes against your favorite ideas. If the basics of a company you love have gotten worse, swallow your pride, change your mind, and move on. See things as they are, even when you don't like it, especially when you don't like it. Pillar 9. Focus. Keeping things simple and remembering what you set out to do. Protect your good name and your honesty above all else. They take a lifetime to build and can be destroyed in 5 minutes. Fight boredom and thinking you're smarter than you are. Don't miss the obvious by getting lost in tiny details. Be careful to get rid of useless or unimportant information. Munger liked to say that a small leak can sink a great ship. Find the big problems in companies and face them head on, instead of focusing on things that just look good. Conclusion, Munger's big lesson. As you've seen, Charlie Munger's huge success didn't come from a complicated math formula developed at a fancy university. It came from always looking for better ways to think. It comes from the unbreakable connection of 4 qualities: preparation, discipline, patience, and decision. Without one, the others fall apart. Together, they create what Munger called the Lollapalooza effect, a mix of good things that leads to amazing returns. And if you want to take just one practical lesson from this video into your life, take this quote from Munger about the secret to investing in stocks. We have a certain fondness for investing large sums of money in assets that allow us to avoid future decisions. If you buy something because it's undervalued, you have to think about selling it when the price gets close to its true value. That's hard. But if you can invest in a few great businesses, you can just sit back. And that's great. Buy extraordinary businesses at reasonable prices, use this checklist to protect yourself from your own biases, and then, just don't do anything. Let time work for you. If this investment philosophy makes sense to you, click the like button, subscribe to the channel, and comment below. Which of these checklist rules do you most need to start using today? Thanks so much for watching, and I'll see you in the next video.